Alright everyone, Cowboy Trades here, welcome to the channel and welcome to the educational series. In this episode we're going to be talking about how to trade triangles in Elliott Wave Theory. We're specifically going to be looking at 5-wave symmetrical triangles, so let's dive right into this. Now, if you don't know Elliott Wave Theory, I definitely recommend you learn this before looking at how to trade Elliott Wave triangles. I've made a educational series update before talking about how to Elliott Wave Theory. So if you don't know Elliott Wave Theory yet, I highly recommend you go over to my YouTube channel, head over to the playlist and head over to my educational series where you will find a 17-minute video in depth talking about everything you need to know on how to trade basic Elliott Wave Theory. I'm going to assume you already know your basic ABCs and 1, 2, 3, 4, 5s while we are coming into this video. So let's dive right into this. Now, this is a beautiful pattern that I love to trade a lot in Elliott Wave Theory. Specifically, we're going to be looking at the S&P 500 for this, but you can trade this on Bitcoin, you can trade this on altcoins, you can trade this on gold, silver, commodities, assets, anything you want. So let's look at the S&P 500 right now, and we'll talk about this. Now, as you can see, this is a 5-wave symmetrical triangle that we are currently trading in. You can find these all across the S&P 500, but I'll give you an example of what I currently see while I'm recording this video. Do bear in mind, if you're watching this video in a year's time, 2 years time, 3 years time, the markets will be completely different, so you'll want to look at the charts yourself and see if you can identify one of these to trade. We're looking at the weekly time frame for the S&P 500. And as you can see right now, we're in a bear market. We are falling to the downside. So we are right now in a falling market. What we've done is we've had a 1, 2, 3, 4, 5 bearish wave count to the downside. And then we've started to form this symmetrical triangle. As you can see, we pumped up. This is wave A, wave B, wave C, wave D, and wave E. Now, if you're wondering how I've marked my charts with these 5 waves and these A, B, C, D, E corrections, you can simply come over to the left side of the screen, look at patterns on TradingView, and you can see you have your Elliott Wave 1, 2, 3, 4, 5 impulses, A, B, C, D, E, WXYs, and ABC WXYs over here. So just favorite a few of these and you can find them up at the top of your TradingView bar. As you can see, we are currently trading in a 5-wave asymmetrical triangle. Now, I am looking at this source over here. I will leave a link in the description down below to this specific source that I've got, but I've just copy and pasted this picture over on my TradingView. So we'll look at this specific picture here. As you can see, we've had a bearish 5-wave into this triangle. So we know that we're in a falling market. And as you can see, according to this asymmetrical triangle, what we should have right now is wave A right at the top, a wave B correction forming the base of this symmetrical triangle. We have a bounce back up to the top forming wave C. We have a bounce back to the downside forming wave D. And then we bounce back up to the top of this symmetrical triangle on wave E. Now, according to this Elliott Wave Theory, this is where we should be topping out and breaking to the downside. So if you are trading asymmetrical triangles, what you'd want to do is you would want to open a short as we're coming up to this resistance here. You'd probably want to put your stop loss just above here, just above wave C, because if you are trading this and all of a sudden we start pumping, flipping wave C and breaking to the upside, you're pretty much invalidating this pattern. But it's possible we can have a throw over the trend line and then break back down. This often happens a lot of the time. So what I recommend to do is, if you are trading this, have a stop loss above wave C right here, just in case. You'd obviously then want to start to see the market start to break back down to the downside. If you're looking for a specific price target, I personally like to look at the target from wave B to wave C and start having take profits around about the 618 to 786 Fibonacci. If you don't know Fibonacci's, we also have a educational series update on my channel on how to trade Fibonacci retracement. So I find that using Fibonacci's with Elliott Wave Theory is a beautiful way to navigate these markets. But how do you know exactly? So we know how to trade this. Very simply, in the macro time frame, we look at this, we trade as we run into the resistance on wave E in a falling market, and you want to start shorting down to the 618 Fibonacci. How would you trade this in a rising market? Well, It's the exact same, but on the inverse. If you're currently watching this video and we're in a bull run, it looks exactly like this, but we just invert the chart. So in a rising market, you bullishly break into the symmetrical triangle. You kind of know which way the triangle breaks depending on which direction you've come into the triangle. So for example, this would be what a bull run looks like. I've just inverted the chart. So you would see a bullish 1, 2, 3, 4, 5 into this pattern over here. So we've bullishly broken up, and as you can see, we would have the same A, B, C, D, E as we did before, but we're now in a rising market. So you can see the lows on this asymmetrical triangle are marked on wave A, C, and E, just like we have here in a rising market, A, C, and E. And if you were trading this in a bull run, you would want to start longing from wave E right here. Once again, you'd want to have your stop loss beneath wave C because you're going to be longing. And if you're looking for a take profit, once again, draw your fib from wave B to wave E and start taking profit round about the 618 to 786 Fibonacci. Bear in mind, it's completely up to you where you take profit. Myself, I am a very conservative trader. Some people would take, a breakout target, something like from wave B to wave E, and look at something like this, the 1.236 or maybe even the 1.618. It's completely up to yourself. I'm a conservative trader. This is my trading plan. I just wanted to share with you one way on how you can trade these asymmetrical triangles. So we now know how to trade these in the macro picture in a rising market and a falling market. We know about where to keep your stop losses, where to know when the trade is invalidated, and also where to take profit using Fibonacci's. You can take this one step further because with this picture I'm giving you here, we're looking at the weekly time frame and we're looking at a really, really big wave count. But within this asymmetrical triangle, we actually have miniature waves. Now, according to Elliott Wave Theory, what we actually have is we have ABC corrections everywhere within the market structure. So in typical Elliott Wave Theory, it looks something like this. If we come over to the daily time frame, we have the same A, B, C, D, and E, but what you're expecting is ABC corrections all across the board. So if I find the tool over here for ABCs, what this looks like is something like this. You have an A, B, C down to wave B. Where's my tool? Here we go. Then you have something like a B, C up to wave C, and then you have a B, C down to wave D, and then you have a final A, B, C up to wave E. This is of course in a bear market, in a falling market structure. If you are in a bull run, once again, it looks the exact same. We just invert the picture. Bullish ABC, correctory ABC, 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 coming down to wave E, and then that's when you expect the breakout to the upside. In a bear market, it's the opposite. We just break to the downside after wave E. But I'm personally not the biggest fan on how this looks. I personally think, in my own experience from trading lots of symmetrical triangles, I don't always think it looks as neat when you're only looking at ABC corrections. I recommend to look at the markets and look at exactly how they're trading. I personally find that, drawing this correctory wave as an ABC doesn't make as much sense to me. If we get rid of this, in my opinion, this doesn't so much look like an ABC to me as much as it looks like a 1, 2, 3, 4, 5 wave. Different triangles vary, but I find that in this specific one here, we've had a 5 wave down. After a 5 wave, we have a ABC. This clearly looks like an ABC to me. But then over here, this correctory wave over here, this doesn't, you can argue, of course, this does look somewhat like an ABC. In my opinion, I kind of like to draw the 1, 2, 3, 4, 5 after this ABC. And then, of course, over here, very unarguable on the daily time frame that this is a ABC. Although, with that being said, you could actually draw this as a 1, 2, 3, 4, 5. I recommend just looking at the wave count and deciding for yourself which way they're moving. Of course, in the higher time frames, it should look like this. In a falling market, you have a bearish wave count coming into the asymmetrical triangle. Then you form an A, B, C, D, E. When you top out on wave E, you break to the downside. Of course, in a rising market, you just bullishly break into the asymmetrical triangle, and then once you find the low round here on wave E, you break out to the upside. But this is really a macro wave count, A, B, C, D, E. That's obviously 5 waves, 1, 2, 3, 4, 5. This is why it's a 5-wave symmetrical triangle, but you can, like I said, take it a step further. You can look at individual wave counts within these to give you a better idea at when you're actually topping out. Because, for example, this is the same triangle as this. However, in the lower time frames, you can actually see, while this is just one wave up on this macro chart, if we come over to the daily, like we previously discussed, this kind of looks like a completed ABC, or even you could argue that this was a 1, 2, 3, 4, 5, and that just gives you a better idea in the lower time frames on when to enter a trade. But of course, in the higher time frames, you know, as you're running into this resistance, this is pretty much where you want to enter the trade. So there we go. Just wanted to get a part 2 of the Elliott Wave Theory out. I do have some more Elliott Wave patterns that I do want to cover, like WXY double free structures. But for this video, just wanted to make an Elliott Wave Theory part 2. I will make a few more Elliott Wave Theory videos discussing other patterns and how to trade them. I hope you did enjoy this video on how to trade 5-wave asymmetrical triangles. Like I said, I will leave a link to the resources down below if you want to read even more in depth on what I've just discussed in this video. But I'll leave it here for today. If you did enjoy this video, as always, let me know down below by leaving a like and a comment, share the videos with your friends. Also, if you did enjoy this educational series update, bear in mind, this is simply one educational series update out of an entire playlist. I've currently got 34 educational series updates. By the time this comes out, this will be the 35th addition to this educational series. So if you want more information on the cryptocurrency market, stock markets, basic overviews on TradingView, like how to use EMA ribbons, how to look at depth crosses, how to overlay charts on top of each other, how to compare different assets, Elliott Wave Theory, Fibonacci, CME gaps, what are securities, we discuss all of this and more on the channel. So be sure to come check that out. Like I said, make sure to leave a like and a comment if this helped you. If you want to further support the channel, feel free to click the join button and become a member today. It's been your boy Cowboy Trades. I'm out. Peace.